Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Economic data we have out today, NAHB, which is the National Association of Home Builders, came in at 58, was expected 59, so slightly lower than expected. One of the major things that happened over the weekend, we talked about that on Friday in the daily market commentary. I even touched on it in the webinar. We have this crude oil big meeting over in the Middle East. Basically, Russia came down to the table, Saudi Arabia, everybody else, and those talks really broke down. The reason why was because Saudi Arabia basically walked away from the negotiation tables because they know that Iran is not going to limit production. Iran did not show up. Saudi Arabia was hoping at the 11th hour, maybe Iran would show up to talk about production cuts. Didn't happen. Iran has said that they are not going to limit production until they reach their 4 million barrel a day. All right, so it's going to be interesting to see, even after they make that 4 million barrel a day production level, if they're going to cap off their production. They might look at it like, hey, we got to do some catch up, put some money in the coffers because of all this time we've been banned from selling oil on the open market. So that's going to be interesting to see. Right now, because they aren't coming to the table, those talks broke down. Now, surprisingly enough, oil was down on the day because of that news, that the word that there was a breakdown in those talks. But one of the other wild cards that came out of that was there's a big oil strike. The workers in the oil fields have gone on strike in Kuwait, and that has cut their production from 3 million barrels a day to 1.1 million barrels a day. So the bulls in the oil sector really gravitated towards that, took that as a time to buy up oil, and as you can see, oil is rallying now. One of the things that caused the equities to rally was that oil rallying, and as you can see here, NASDAQ /NQ up 16 points on the day, and the E-mini S&Ps blasting higher, up about just over 11 points on the day, very close to the highs. And if we look at the breakdown on the daily chart, you can see where oil started rallying and then the equities followed suit. So basically just making new highs as we speak in the E-mini S&Ps /ES. Now, I've talked about this time and time again. We saw a decoupling of oil and the equities. Now we're starting to see those converge back into a being lockstep. When oil rallies, equities rally. Now, right now is not the time to have that kind of correlation. I've talked about this before. If oil's going up because of demand, because the economy is starting to fire on all cylinders, because manufacturing is starting to use more oil, then that's one thing. That would lead you to believe that the equities are going to cruise higher. But when we are in a very fragile economy right now, like we are, we're not seeing a whole lot of velocity of money. That's when we should see, if oil goes down, we see the equities go up and have the inverse relationship in a sense, because with low oil prices, it's going to create lower gas prices. If we have lower gas prices, the average American, middle America, is going to spend that extra $5-10 that they would normally spend on filling up their tank of gas, that they're going to spend that somewhere else, like at Starbucks, or buy an extra toy for their kids. They're going to spend that money in different areas of the economy, which creates the velocity of money that we desperately need right now, because that's the trickle down effect. Because once the Starbucks person gets that money, or that local merchant gets money, then he's going to spend that extra money somewhere else. So that creates velocity of money, which is what we would like to see right now. Just because oil prices are going up because of some production cuts doesn't necessarily mean that it is due to demand. So keep that in mind. We're starting to see those correlated again, but it's not necessarily the right time to see that correlation happen. Onto some trades that I've done. Now, earlier today, market was down. XOP is what I talked about in this webinar. It has pretty decent high implied volatility, and I was talking about around this meeting, I could easily see it either sell off slightly, so I'm more bearish in oil right now than I am bullish, but with this production cut coming out of Kuwait because of that strike from the employees in the oil fields, we're starting to see this rally a little bit. But having said that, I still see oil pretty much trending sideways to slightly down on the day. So in XOP, I did the May 28.5 puts with the 36 calls to create that strangle, and I collected 77 cents for that. I go into all the rules and details of how to set this strategy up in that webinar, so you can go to protraderstrategies.com, get that sent to you. I just don't have enough time in a quick daily market commentary to go into all that. But we talked about how I was going to set this up on Friday, and I said I was going to implement it today, and I have done that. On to EWZ. We talked about this also. President Rozov was going up for some impeachment hearings, and they voted pretty unanimously, not unanimously, but she easily got the 2/3 vote to impeach or start the impeachment proceedings on her by the Gang of Thieves. Everybody in that government seems to have some type of illegal activity, if you will, and some of the people that were accepting bribes and things of that nature are the ones that are impeaching her for trying to really help out the government in a sense, but doing it somewhat in a shady manner. So in XOP, or sorry, this is EWZ, which is the Brazilian ETF. That one I ended up doing a strangle around. Also, I did that on Friday and did the May 24 puts with the 32.5 calls to create that strangle. Sold that for 71 cents. Brazil being up a little bit today, but I really don't see their economy doing that well either, and could easily see that trending sideways. But this was what I was looking for, is to see this little bit of volatility contraction in there after that binary event of those proceedings. Onto a trade that I'm looking at doing in Netflix. As you can see here, we have almost a $10.50 market maker move. That is what the market is predicting Netflix to either move $10.50 higher or $10.50 lower. I talk about this in a earnings strategy setup for these earnings plays a few months ago, so you can get that also sent to you. But I'm going to be looking at going outside of that $10.50 move, and I'm more bearish on Netflix. I just think it's kind of lost a little bit of its luster. So I'm either going to just sell these 123 calls and maybe come in here and sell the 96 or the 95.5 puts to kind of do that strangle around this for the earnings trade. And, you know, I'm looking for that volatility crush to happen tomorrow, but I don't really think that they're going to knock it out of the park. So I may just do the calls. It's going to be a kind of 11th hour decision. I usually do these in the afternoon, pretty close to the end of the day, an hour or two before the end of the day, just to capture that market maker move in either direction cleanly If I do it now and we sell off another $2 or $3, that puts me in jeopardy on my put. So I'm going to be looking to try and implement that towards the end of the day. So if you follow me on Twitter at Wolfman's blog, I'll probably blast that out. That's about all I got for you guys today. Friday's webinar is going to be on the straddles, and then we're going to be doing some long call spreads, long put spreads going forward in the next couple of weeks, just because if we're going to continue to see this low implied volatility environment, I'm going to have to start implementing some of those. So some of you guys know that I don't like to do debit spreads, but in this environment, 5 to 10% of my portfolio in long options strategies is not a bad thing necessarily. So I'm going to talk about how to do that and when and where to find those trades. That's all I got for you guys today. If you can't take that, take it easy.